In this video, I'll run through my complete portfolio and show how it's been performing this year so far, and since I started way back in 2009. I'll also reveal what I've been buying over the last quarter, and I'll discuss my plans for the months ahead. I'll go through each sector in ascending order of performance so far this year. This is not investment advice, and I'm only showing you my own journey. My worst performing sector this year has been the industrials, and I have two companies, Bunzl and the chemical specialist Croda. It's been a very bad year for both of them. As I go through the slides, this figure is the year-to-date average change in value of the shares in a given sector. It's a weighted average based on the value of those specific holdings. This figure shows the current size of my holding for each company. Here is a year-to-date price change for that company, and here is the yearly dividend yield. Way back in April, Bunzl issued a profits warning because of macroeconomic uncertainty. Times are tough, but Bunzl is a well-run company and has a good track record of raising a dividend, so I'm happy to hold for now. Croda has been on a downward trend for several years now, but eventually good times should return again. In the renewable energy sector, I have just one company, Greencoat Wind Energy, and it's down 15.5% this year. The dividend is huge, however, at 9.2% spread over 4 payments a year. The company has a policy of increasing the dividend in line with inflation. So could this be a good opportunity for investors? Let me know in the comments. In the consumer goods sector, I have 3 companies and they are down an average of 13% this year. Diageo has had a very poor few years now with several profits warnings. Unilever is faring a little better, but is still in the red. Haleon, which used to be part of GSK, is also down in 2025. Not a good year in the consumer goods sector. In the brokerage services sector, I have 2 companies, and overall it's down 6.6%. IG Group pays a decent dividend of 4.4% and is up 7% this year. It is also the 3rd largest company in the FTSE 250 and might one day get promoted into the FTSE 100 index. The London Stock Exchange Group has been really disappointing, down 25% this year. But it benefits from strong margins, high barriers to entry, and with a valuable partnership with Microsoft, it could well be a stock worth considering. In the information technology sector, I have 3 companies, and they are down an average of 4.5% this year. The dividends of these 2 are very low, and for that reason I keep them in a general investment account, as I tend to fill the ISA each year. Sage is also down on the year, and I keep this one outside the ISA too. Now for the house builders, and I've just one company, Persimmon, and it's slightly down this year. I've only got a small amount invested here, and I like to buy this one on the dips. If it drops below £10, I'll probably add a bit more. In the mining sector, I have just one company, Rio Tinto, and it's more or less unchanged this year. It pays a very nice dividend of 5.7%. Mining shares can be extremely volatile, so I buy this one very cautiously. Now for my S&P 500 ETF, and finally we see something that's actually up this year. It pays a small dividend of 1% spread over 4 payments. The ETF I have has the ticker code IUSA. Quite a lot of new money these days goes into this particular ETF, and you can see from the graph there seems to be a bit of an upward trend at the moment. In the oil and gas sector, I have 2 companies, BP and Shell. They are up an average of 7.5%. This is another volatile sector, and I've been buying a bit more of BP recently while the price has been lower. Dividends from these 2 look very strong. Now for my global ETFs, and I have 3 of them. The average price is up over 8%. VWRL is basically owning the whole global economy in a single share. VHYL is similar but focuses on companies paying higher dividends. And finally, I have my current favourite of the 3, which is VEVE, and this one focuses on companies in developed markets. I've been adding quite a lot to this one over the last year. In the utility sector, I have 3 companies. On average, the sector is up almost 10% and dividends are very reasonable. The 3rd company, United Utilities, is also doing fairly well this year, up 9%. My final ETF now, and this one has performed the best of all of them. It tracks the FTSE 100 and is up 15% this year. The ticker code is ISF and it pays a dividend of 3.4% spread over 4 payments. In the food and tobacco sector, I have 3 companies. The sector as a whole is up 15.4%. These two are not only showing an impressive share price growth, but their dividends are high too. Tate & Lyle, on the other hand, just seems to be collapsing. Just when will it end? It's down a huge 44% this year. Fortunately, I don't have a huge amount invested, and Tate & Lyle makes up less than 1% of the entire portfolio. We are into the top 5 now, and at number 5 is the pharmaceutical sector. I have 2 companies, AstraZeneca and GSK. The sector is up over 20% this year. GSK pays the higher dividend and is a quarterly payer. At number 4, it's the retail sector, and I have just 1 company, Tesco. It's also up over 20% at the time of this video. It's a much leaner, more focused business these days, and I'm happy to hold for the long term. The dividend is fairly average for a FTSE 100 company at 3.2%. At number 3, it's the banking sector, and I have 3 companies. On average, the sector is up an incredible 42% this year. I've been buying a few more HSBC shares recently to catch some of this upward momentum, and also the dividend is very attractive. Lloyds, however, has done even better and is up 52.5% this year. Could we actually see Lloyds get back to £1 a share? We'll have to wait and see. But surpassing even the banks, and at number 2 is the insurance sector, and I have just 1 company, Aviva. It's up 43.9% this year, and the dividend is high at 5.4%. I've been adding more to this one. Aviva really does have a lot of momentum. I might even consider adding another insurance company to the portfolio. More about that one later. And still at number 1 is Defence and Aerospace, and I have 2 companies, and they're up an average of 93.5% this year. Both these companies are in high demand as countries around the world boost their defences. Rolls-Royce has started paying dividends again, and it's a pity I have this one outside the ISA. Just a quick reminder that if you are thinking of starting your own investing journey like I have, then Trading 212 will give you a free fractional share worth up to £100 if you sign up using my link in the video description. So what have I been buying recently? With my portfolio now paying over £1,500 in dividends per month after tax, I don't always need to deposit new money in to buy more shares. I can simply use the dividends and look for bargains. This screen shows my purchases over the last quarter. I've added more to BP while the price was lower. Aviva is showing some good momentum at the moment, and I've added more in. I continue to drip feed more money into IUSA, and I've added a bit more to HSBC, National Grid and Persimmon. As I'm generally a buy and hold investor, there have been no sales. Every month I reveal all my purchases, so why not subscribe to the channel to keep up to date on what I'm doing. Now for my plans for the months ahead. Well, I intend to purchase more of the S&P 500 and developed world ETFs, especially as the prices are a bit subdued at the moment. I'm keeping a very close eye on Legal & General because of its high dividend and share price performance. It's actually up 18% over the last 5 years and pays a dividend of 9.1%. The average dividend yield of my portfolio is currently only 2.9%, and I like to keep it between 3 and 4%. And for the same reason, I'm also considering an ETF called IUKD, which tracks a selection of large to mid-cap UK companies which pay higher dividends. Here are the largest ones you would own. The yield is 5.4% spread over 4 payments. Ongoing charges are 0.4%. If you are finding this content useful, then I'd really appreciate a quick tap of that like button. Cash in the portfolio stands at £538. Now for the performance so far in 2025. At the end of 2024, the portfolio stood at 512k. At the end of the third quarter, the portfolio stands at 661k. 22k of new money has gone into the platform from wages and savings. Because of the low share prices earlier in the year, I've utilised a lot more of my savings and added more money in than I normally would do. So my year-to-date gain is 127k, which equates to a net percentage increase of 24.9% over the last 9 months. So despite the stock market chaos earlier this year, the portfolio performance has been quite strong. Of course, this is all unrealised gains as I haven't actually sold my shares or taken a profit. I'll now compare the performance of the portfolio this year with other indices, and to do this fairly I'll strip out any dividends I've been paid so far this year. With dividend payments subtracted, the share price growth alone is up 21.9%. You can see in this table the portfolio has outperformed the FTSE 100, 250 and all share index, and it's also beaten a typical S&P 500 ETF and an all-world ETF. I don't expect to always do this, however, and things can change so quickly in the markets. Now for my overall performance since I started in 2009. I made plenty of mistakes in the early days as I was learning the hard way, and all my figures include everything. I try to be fully transparent. The total amount I put in for my wages since I started is 299k. But I didn't put this in as one big lump sum. I only started with £5,000 at the beginning, and then I proceeded to drip feed in spare money each month. As you have seen, the value of the portfolio stands at around 661k. Giving me a current net gain of 362k or 121.4%. Many investors will have done much better than this, of course, and I'm only showing you my own journey. If you don't already know, I've created a pie on Trading 212, which is based on this portfolio. I don't necessarily recommend you copy another person's portfolio, as what might be suitable for one person might not be suitable for another, so it's really just for reference, and perhaps to keep track of any significant changes I make. I'll leave a link to the pie in the video description if you are interested in taking a look. Not only does the capital of my portfolio grow over time, but it also pays a stream of dividends, which I find really motivating. Last month I received more dividends than I ever have in nearly 17 years of investing. To see how much passive income a portfolio of this size can pay out in just 1 month, then click this video here.